Good morning. 10 a.m. here on the East Coast. I'm Jay. Welcome to SmartHelping.com live financial modeling. Yesterday we had about 4 viewers at the end of the stream when I was ending it, so that's a good sign. People are coming in to see what's going on. Welcome. We're going to finish this e-commerce three-statement model today. We're going to start on the income statement and move through. Before we get to that, let's go ahead and send out the link to Twitter. Check my sound and out the link. Looks good. Here's that. Don't forget, check out smarthelping.com. One tool I wanted to talk about was a small business tool for basically tightening up your finances as a small business. A lot of times you will track, receivables, payables. You might have some paper tracking or just keep it in your head or some rough system. So this bundle gives you all kinds of tracking tools, budgeting tools, a couple financial models that are more general. It actually does include the e-commerce model in here, as well as 3 other brick and mortar shop templates, um, inventory tracking, employee scheduling, timesheets, to-do list trackers, general three-statement model, valuation, retirement planner, net worth calculator, all sorts of cool stuff. So this is a nice bundle. Check it out if you want. $179 for this one, and lots of value here with these spreadsheets. Okay, so let's. Oh, and remember, you can buy everything on smarthelping.com for $9.99. Over 100 templates, financial models, tools, spreadsheets, all kinds of different stuff, based on all the work I've done in my years. So e-commerce tracker. Let's see. So we've got income statement that we need to integrate here. And let's look at the different revenue streams we've got going on, which are going to be sales revenue from ad spend, from partners, and from organic. Now, on the income statement, so I don't know on the executive summary, we could probably add, I don't know if I want to put all the well, for now we're just going to do, let me look back at this. Can we combine any of these? Honestly, so it's all revenue of the same thing. So we're just gonna do sales here, and I'm just gonna total up all the revenue streams, which would be this row here, and all this is gonna tie through and tie back into the monthly detail and everything else. Let me set this to 1 month prior just to make sure the stopper is working. Cost of goods sold. This is going to be an interesting item because we're going to do inventory logic. So that means the money I spend to buy the items that I'm selling or produce is going to be the cost of goods sold, which is based on an entry in the uh, expense assumptions, I believe, at the bottom. Let's see yeah, right here. And this, like if you're drop shipping, this would be that cost. And if you were drop shipping, you wouldn't really buy inventory ahead of time. The point of drop shipping is you're kind of just ordering it from the drop shipper and then they deliver it. You're not holding the inventory. So in this case, you just enter a 1 on your inventory tab. But if you were doing inventory where you're storing it or you're buying inventory or paying upfront for inventory for the next couple months, you would put a number of months in here and it'll purchase inventory every time and there'll be a cash reconciliation of that. So cost of goods sold, here's that. And this is only inventory items, like I said. There's also going to be other operating costs. So we've got a couple here. We've got sales and marketing, partner commissions, ad spend. So that's going to just be the total sales and marketing actually. General and administrative, and research and development. Now, they might all not be relevant, but we're going to have to account for all these in the income statement for sure. So let's go ahead and add these. Oh, come on, Excel. What are you doing? Froze up on me. Stand by. Hope everyone's having a good week after the 4th of July. Come on. Oh, I hate when this happens. Okay, there we go. Let me save this real quick. So we've got sales and marketing, general and administrative, research and development, and startup costs. So sales and marketing, first one here, G&A, R&D, startup costs, perfect. $259. Get that formatted. Okay, so after all of that, we can now see earnings before interest, tax, depreciation, amortization. Essentially the cash flow that the business is generating after all its revenue and expenses. Interest. Why do we not have any interest showing up here? Definitely should be in column C. Ah, I see, debt schedule. So we switch this back to 2021. There we go. So interest, depreciation, no big changes there. We're just going to use a standard CapEx. If you have any items that you're going to depreciate, like computer equipment would be one probably for e-commerce. Maybe manufacturing equipment if you're building something. Building, probably you're not. You might have a building. It depends on the operation and the scale. But anyway, you can enter all these here, and be sure to leave column F. Never leave this blank. Well, if you leave this blank, you're going to have to you'll have a number error here, so you need to make sure G is not. You just would clear this out, or you can just clear these three out and just leave F as a number, and you'll see the error. There's no error in that case. Okay. Then we've got depreciation, some other items for taxes, and then net income. Okay, this looks good. Sorry. Income statement annual. Let's drag this down, make sure it matches. So this is checking the total net income here against the monthly. 59, looking good. Okay, so income statement completed. Now let's go over and reference some stuff on the cash flow. So we have receipts, income statement D9. Yep, that's good. Payments for inventory. So this is when you're actually making the purchases. So in this case, we're doing it every 3 months. Let's say it was, every 6 months. I would go over to this inventory tab, put 6 here. And now it's taking the cost of goods sold for 6 months, and your cash flow is going out in month one of that, and then every 6 months it goes. So there's that. Other OPEX, so these are the other operational expenses. We got C25, which is good because remember, this cost of goods sold is rolled into this. So we don't want to double count it. So in the calculation to figure out cash flow, we need revenues, expenses, payments for inventory, which is just the cost of goods sold, but it's rolled up in every 6 months in this case, and then interest, taxes. So you see, if we added this cost of goods sold here as well, we'd now be double counting the cost of goods sold, which is not good, and nothing would balance either. So that's fine. Capital expenditure, good. Sale business. Let's look at the terminal value here. So e-commerce business, there's all kinds of valuation techniques and rules of thumb. There's actually a lot of books on it too. But let's just look at what we're doing here. So this is currently doing a 12-month EBITDA multiple. And so for like a drop shipping business like this, like an e-commerce business, could be a drop shipping business, could be all kinds of different things. But I believe EBITDA multiple is best, and so we'll keep that like it is. And so that means we're going to value it based on the trailing 12 months from the end month. So that's taking this number, applying the multiple. Here's the valuation. So that's working good. Man, we're just rolling through this thing. Balance sheet should be already set now because we've got everything else linked in, and the balance sheet's just kind of like your checker. So the cash, here's the inventory balance over time. You can see it's going to 0, then repurchase. So that's working. We've got assets, accumulated depreciation, total assets, total liabilities, owner's equity, retained earnings, and then owner's equity plus liabilities always equals assets. Otherwise, something's wrong. So balance sheet's looking good. Now remember, if I had to import, build all this logic from scratch instead of use a previous template, it would take me quite a bit of time. But since I've already got it built, I can easily just bring that in and then change the references, and now we've got the fully upgraded template. So this looks like we're matching up pretty good. Now you see the inventory balance on the annual is 0 because every 6 months we're running out and then repurchasing. So that's a multiple of 12 is a multiple of 6, so it's always going to be 0. Now we could, let's see, if you were to change this to say every 5 months, you're now going to see an inventory balance at the end of each year. Like this, except for the end month because 60 is a multiple of 5, so that means that'd be a month where your inventory balance has been fully depleted. The main point of doing the offset with the inventory, let's just put it at say 4, is to account for the cash effects of buying inventory ahead of time. And then you can see the balance of that over time, as well as the effect on cash flow. Now this negative cash balance is not going to be there because this is currently based on the monthly detail tab, minimum equity, and right now we have to build that. So we want to solve for the minimum cash needed to get this thing off the ground, so we got to take into account all of this stuff. We have to add in the new costs though that we removed here. So first of all, let's delete 268, 286, 68 to 86. Let's get rid of this. Now the monthly cash flow. So we want to say other cash flow items. So debt proceeds is fine. That looks good. We have taxes to add in here. We have CapEx. We have, let's see, we don't need this. We need exit proceeds. And then let's just reference that right on the cash flow statement. So taxes, whoops, that's not going to be year 0. That'll be month 1. CapEx. And then exit proceeds are these two here. Okay. Now this should now have, so so this is just cash flow, running cash flow. We'll call this cumulative. These other metrics are fine. We can delete 307 to 311. All right, so the cash flow per period, we're looking at EBITDA minus startup costs minus debt service plus debt proceeds, and then account for taxes, CapEx, exit. And that should be everything. And we'll know if it's not because our balance sheet cash minimum should go to 0. We should see that going to 0. Also, let's set this back to the last month of the 5th year for the exit. Drag this over. Oh, we didn't drag any of this over yet. There we go. Okay, so row 305 is the minimum equity needed, or the minimum of that is the minimum equity needed. What did I say? 305? Yep. So 1.6 million will cover the startup costs and any burn from operations. Now, if you want to reserve, you can always go to the startup cost and just put a reserve in, and then in theory, when your balance hits 0, you would have this reserve amount still remaining. Okay, here we go. Balance sheet. Okay, no, it is not. We are not getting everything because this should be 0 somewhere in here. It's close, but it's not. So what are we missing here? So we'll look at the cash flow statement compared to this, and let's look at period 1 cash flow. So that in this case, it would be this plus that. And on the cash flow statement, it is this. 1.5. Oh, and then we have to account for the equity as well. So 67,931. Now let's see, period 2 cash flow is that. 12,064. Okay, so I know exactly what it is. So the inventory purchases. Right now, this model on the monthly detail, we have the cost of goods sold just hitting here, but in the actual cash flow, those need to be zeroed out. So we got to add back cost of goods sold, and then reduce formatting on this, weird. Reduce inventory purchases. So here we simply go add back this, but subtract out that. And you can see the net here is the amount, 67,931. That's how much we are out. So on the calculation here, simply add this and this together. And now we should match up. Okay, perfect. There's our 0. So we know that this is matching the monthly detail at least at the initial part, which is good to see. That's our check on that. Rest of this matches monthly and annual. Good. So this is all good. Let's do executive summary update. So here we can put on this, I definitely would want to show revenue from ad spend, revenue from partners, revenue from organic. This is not relevant. Oh wait, no, we do want yearly unit sales. That is definitely relevant actually. Also, before I get too far, let's put this section on the annual. So C295. And these should be sum ifs. Also, update the cash flow in the period calculation. Alrighty. Now the check, this ending cash balance should match the ending monthly detail cash flow balance. It does not. What are we out? $115. Okay, so if we go to the monthly, let's just check the first year. $1,357. Okay, so that's good. These are startup costs. Oh, wait. Oh, this part. Okay. So remember, this was one row offset, so we have to update that. There we go. So that matches our monthly detail matches annual. That's great. Back to the executive summary. So here's our per unit sales. Let me just double check that row is still the right row. E106. Total sales count. That looks good. 1, 2, 3. Perfect. So yearly units sold, and then the revenue from each. Let's go. What was the first one? Ad spend. So revenue from ads, revenue from partners, revenue from organic. Now, what's important about these financial simulations I'm doing is it gives the owner, operator, or founder a good way, or investors, to see kind of the plan of the company, the unit economics, the different ways that strategies are being implemented, and the expected financial performance of that based on the assumptions. Obviously, the assumptions could be different, but you have to give some kind of reasoning for the logic of how things work um, to make sure it's just generally feasible, especially at scale. Okay, so we got total revenue 22,756. Yep, that matches that. Cost of goods sold. So this all looks good. We'll have to add, startup costs are actually here. That's good. So debt service, let's bring everything through this and decrease in cash as a negative. Debt service coverage, that's a good metric. Exit proceeds, 300, let's see. Nope, it would be 299. Loan proceeds, I believe that's the same. Loan payback, this doesn't exist, but we'll put in here CapEx. Now we also have to do add back cost of goods sold, reduce purchases. Now this is actually the same. I mean, it's going to be the same because as long as the purchase month is a multiple of 12. Now again, if it was 5, it's going to be different, which you can see here. They're a little bit different, but they still add up. They should add up to the same 9282. Yeah. But anyway, so let's put that in here in case they are different. You'd have to account for that. So add back cost of goods sold, reduce purchases. Now anything else? Oh yeah, taxes. And the executive summary is kind of like a one-page or snapshot of everything, so that's why I have it in here as a extra summary. All right, now we should in theory be able to go EBITDA plus sum of all of this. And then that should match. If we check this balance against the annual detail, it should match. It does not, so we're out 261, so something's not right. So what could we be missing? Cost of goods sold, purchases, debt service. Startup costs. This is a negative. Perfect, there we go. So this matches now. Yearly unit sales, these charts are intact. We'll keep those. Project I. So, okay, let's do the distributions tab next. By the way, guys, I know somebody said something in chat yesterday and I didn't see it. I'll try to look at that more if you guys do say stuff so I can respond, because trust me, when you're out here streaming like this, any kind of communication with people is welcomed. So I could talk to you guys about whatever. Doesn't have to be about finance, but it can be. All right, remaining equity to use. So this is going to be the total cash flow. Well, actually, it's going to be the total equity required plus cash flow in period 1 of the monthly. So that's remaining. The actual contributions are going to be the minimum equity required, and that is going to equal that. Now here, we got reference errors, so let's just redo the formula. So on the distributions, I want to sum up any monthly period of the cash flow row as long as it is greater than 0. And the year matches the year that we're looking at. And then same thing, but on this one, I want any negative amounts, and then those would just pull from the remaining equity to use, and this waterfall will then always work. Let's look at these percentages. They're different now, the positions. So investors get this much coming from the cap table. That number right there. And then owners get the remaining. Oh, we also have to update the equity contribution of each. So investors is this amount. Owners. Remaining equity for owners. Okay, looking good. IRR of the project 45.1. IRR of investor and owner here. We got a chart visualization. That's working fine. Let's update the formatting on these boxes. I like the soft grid lines better. Okay, looking good. We'll check. So the check here would be, we'll do a second check. The sum of everything that's happening here against the annual cash flow ending balance should be the same. Perfect, so that works. And guys, note when I'm done with this e-commerce model, next week I'm going to do vending machine, and then after that it's a brand new model. So I'm taking suggestions. If I don't get a suggestion or something I want to do, I'll just try to think of one, a new financial model from scratch. You'll see me thinking through the assumptions. I'll be researching live, and building logic live, not just the three-statement modeling, but everything. So like all this stuff you see in this model, like the revenue assumptions, all that kind of thing. So we'll really be building from scratch at that point. We'll still integrate the three-statement model at the end, but we'll be doing a lot more up until that point. And yeah, I can't wait to start doing new models. It's exciting. So this is completed. Visuals look good. These are good. So yeah, we're getting close here. Only a half an hour in, and we're just about done. Let's do some sanity checks. So annual net income versus monthly income statement. Okay, so that checks out. Balance sheet monthly 60. Yep, that's the right row. Now this one is obviously got to be updated. So annual detail against monthly detail check, because this has to be updated. Checking the balance sheet annual against this. And then the difference should be the difference in that and the investment. Executive summary. Distribution. So what we're doing here is just making sure that all the different summaries that include all the effects of cash flow, we're making sure that they all match each other. And then individual distributions. So that's on the cap table, and that looks good. Oh, wait. No, it doesn't. It's 0, but that's just because these are all 0. So we got to update the references here. So this is C10. but this is C9, so we need to change this to 9. So we can see distribution for each individual investor group. Now that should match, so 16.1, perfect. Update this as well. And update this. Man, I'm so glad this was a nice integration of the three-statement model. No real big issues. 24. Very smooth. All right, we're all set here. Let's do some sanity checks and make sure when we change, or sorry, we just did the sanity checks. Let's update some variables and make sure the sanity checks are still 0. So the biggest things that cause this to mess up is changing the dates here. So let's look at this. And we just want to make sure at every date difference, it's always zeros down here. Okay, now let's check if terminal value is not added. Okay, looking good. You will not believe how many times it took on the first couple sanity check builds and formulations to make sure that you could select yes or no on the terminal value and you could pick arbitrary end months and you would have no differences and variances here. One of the big things I did was adding this selector to include terminal value or not actually was one of the biggest helps to the whole model, because being able to reference that, especially on this CapEx schedule here and a lot of the terminal value stuff, made it so much easier to make the balance sheet match on those like offset years, and also just to do different logic depending on yes or no, because it affected a lot of different things. Oh, so we got to update this too. So this is a little summary at the bottom of the executive summary here showing returns and internal rate of return. So let's make sure this matches. So 45, 16, 156. So that's good. 16 and 24. These are different rows now. So the project would actually be the total. Investor would be this. Owner is this. Now return amount is 9, 16, and 24. Let's make sure that's right. Yep, yep, yep. Okay. Looking good. As a financial modeler, it's so good to always go back and check things, set up sanity checks, because especially when you got a lot of different tabs and a lot of stuff going on, you're very likely to have errors somewhere. So I always do, and I always end up finding them with the checks, and it's it's super necessary. And taking your time to do that just makes you that much more valuable to any client. Okay, well, this thing's done. I'll probably do the overview video tomorrow, where I'll take about 10 minutes to go through each tab, explain everything. I'll update the index tab with the new tabs. Then there'll be a different instructional video. And then, yeah, that'll be up and done. And then next week, uh, like I said, we'll do vending machine. And then, let's see, where's that? So vending machine here on SmartHelping.com is a newer one. Where is it? Vending, vending, vending. So here, this was a really awesome build. If you're looking to deploy vending machines or invest in vending machines and operate them, this model is very, very good for that. So we'll add three financial statements to that. and then it's time for brand new templates, and I'm excited. So for the new templates, the first one, I actually have no idea what I'm going to do yet, so I'll have to think through that. Now it's only Tuesday, so I'm going to be live streaming some more this week. I'm going to do an inventory tracker in Google Sheets, uh, because all of the rest of the ones I've done have been in Excel and are use input cards and macros. So I want to do one that's built natively in Google Sheets and specifically in that platform and using the things that that platform is good at. And they've got some pretty cool filter formulas and arrays that I could use. So I'll do that later in the week. So inventory tracker in Google Sheets, it'll be added to the accounting bundle. I'll add it to the small business playbook as well, and it will be included in the mom and pop shop uh, playbook. Wait, did I just say that? Oh yeah, it'll be included in the inventory bundle as well, where I have just inventory specific templates. So we'll add it to, it'll be integrated into 3 different bundles. I think it'll be good. So that'll be cool. So that's what we'll do the rest of this week. And I'll see you guys later. Don't forget, you can buy everything on smarthelping.com for $9.99. It's super valuable, and I'll see you guys tomorrow.